What's up, guys? Today we're gonna talk about top-down analysis on market structure. So currently we're on EU, we're on the 12-month. So this is how I personally view market structure. This is how I see it. This is how I like it. This is how my strategy runs. There are multiple ways. There are other ways to view this or to do market structure or how to mark up market structure. But personally, this is what works for me. This is where my mojo comes. So again, always back this. Know what works for you, because again, what works for me might not work for you. What works for you might not work for me. So currently we're on the 12-month again on EU. What do I see? I see a break of structure over here. So we're seeing this as a higher high, a higher low. Then we're expecting a continuation to the upside for another higher high. We're expecting price to do just a basic higher low, higher high, higher low, higher high. And again, remember, we're expecting a higher low. So we're expecting price not to break the structural point over here, because if it breaks that structural point over there, then we're possibly shifting the order flow here, or the big banks or the institutional traders or institutional big banks are trying to shift the market structure or the order flow. Because again, if it right now we're expecting another higher high, which is the most probabilistic target for now to break this higher high, since we're in a bullish trend. But again, it's also possible to break this low or to grab liquidity or to maybe do a market shift to continue to the downside. But currently, again, we can never predict the market. So currently right now, we're still expecting for price to soon, maybe in a couple of years, to break this higher high, since we're in a bullish trend right now. So again, price should never go below this low point here, because again, we're expecting another higher high. We're not expecting a lower low, because if it breaks again, then we're expecting a market shift that looks like that. So let's then go to the 1 month, since we see the 12-month already. Let me just remove these drawings over here. So we're in the 1 month right now, and again, remember this blue line over here is the 12-month. So we're expecting another higher high, and we're still expecting another higher low. So either way, the higher low can either make it higher low, or the price can go as low as to here and continue to the upside. As long as price should never go below this, then we're still good for a bullish trend or a bullish bias. So currently, either price is starting to shift right now, either this is the higher low, then we're continuing to the upside, breaking this liquidity high over here, or price can still technically go down to mitigate some of these OBs over here, mitigate it. Wait, let me just draw it, mitigate it, then continue to the upside, following the overall market structure, which is the higher time frame. And again, always respect the higher time frame. The meaning, or the reason why we should always respect the higher time frame, or always keep in mind the higher time frame, is again, on the 12-month, we're currently looking for a pattern like this: higher low, higher high, higher low, and continuation for another higher high. In short, breaking this liquidity high. So again, in the higher time frame, we're expecting a higher high. Okay, so right now, the possible reason of why market, let's say if it breaks this structural high over here, or this liquidity high over here, then the possible reason for it that this current structure, the lower time frame structure, is following the higher time frame structure. That's why you always respect the higher time frame structure, because we can create a story out of it. Let's say this current price point is, let me just delete this. This current price point broke this liquidity high. Then we can say, oh, this specific time frame over here, the 1 month, is doing a bullish trend. The possible reason for a bullish trend is it wants to follow the higher time frame structure. And again, the higher time frame structure is soon we are expecting a grab of this liquidity high, because again, we're creating higher highs, higher highs, and higher lows. So currently right now at the 1 month, let me just erase this. So currently right now in the 1 month, we can mark this up like this: lower low, possibly a lower high. We're still waiting for a break of this structure. So on other time frames, but right now let's just focus on the specific time frame. But on other time frames, the structure could look like this: lower high, higher low, higher high. So we're expecting, obviously, so we're expecting another higher low, but again, we failed to do that. Breaks this higher low, creating a lower low. So we're expecting a lower high, then a continuation for a lower low. So the possible reason for this specific time frame structure is currently forming a bearish trend is, again, we could make a higher low over here, or we could come down to these zones over here, which we have some OBs and imbalances to come and fulfill and mitigate it in the future, then continue to the upside again. Because again, on the 12-month, let's go back to the 12-month. Is again on the 12-month, we're currently forming a bullish trend. So again, most of the time when reading or doing top-down analysis or reading market structure is most of the time creating a story. Again, on the 12-month, we're expecting a bullish trend, but we currently don't know where's the lower high. Okay, either this is the lower high, or either this is the lower high. And again, we can look in lower time frames to have possible reasons on possible expectations on what price can do. Again, we can never predict the market, but again, we can assume or have assumptions that are probabilistic, or instead of 50-50, we can have assumptions that is, let's say, a 55% probable assumption against a 45% for that assumption to not work. So again, the possible reason why currently the structure is forming a bearish trend, this inner structure over here on the lower time frames, because it's possible again to come lower to mitigate this OBs and imbalances, to continue to the upside to grab this liquidity high. So again, we can go to the lower time frames. Let's go back to the 1 month. So currently right now, let's just focus on the specific point. Lower high. Where's the lower low? Lower low. This could be possibly a lower high, but still, we're still waiting for a break of structure to the downside, so we can call this a lower high. Then it's the possible reason, again, on the specific time frame, the possible reason, or possibly the reason for price creating a bullish trend again on the specific time frame. A bearish trend on the specific time frame, because again, we could possibly go lower to this OBC over here on the lower zones, also grab this equal lows over here to come mitigate it, then continue to the upside. So we have the 1 month, and we can go down to the 1 day. Again, you can go to the 1 week, but we can view the 1 week at the 1 day. We just need to zoom out. So currently at the 1 day, let's just say this is the 1 week. Wait, I'll show you what it means. Again, this is the 1 week. It's the same. We can still see it. It's the same in the 1 day, but I digress. So we're creating a higher high, higher low, fails to break it, meaning a sign of weakness or a sign of reversal. Then we break this structural point over here. So currently we're in a lower low, so we're expecting a lower high and lower low, but failed again to do that. Breaks all of the structure, this liquidity, creating another higher high. So we're expecting a higher low within this lower part zone. Again, we're assuming that price should never go below this low point here, because again, we're creating higher highs, so we're expecting a higher low. Again, higher low should never break the previous lower low. If it breaks, then it's possibly a liquidity grab or a possible market shift to the downside. But currently, we're still bullish, specifically on the weekly time frame. So we're expecting a higher high, because we're expecting structure to do this higher high, then again a higher low to continue to the upside. Then we can create another story on why price is currently in this specific time frame, why price is forming a bullish trend. It's possibly fulfilling either to grab this higher high, liquidity high over here, and continue to the upside, again following the higher time frame analysis, or it could be following the other time frame, the 6-month, higher low, higher high, breaks of it, so a higher low, so we're expecting a lower high and continue to the downside. So either way, on the lower time frames, we should be a little bit more on the specific lower time frame, the weekly. The possible reason for price is forming a bullish trend is again to either create a lower high, or to create, or to destroy, or to target and break this liquidity high over here to continue to the upside, to fulfill or to follow again the higher time frame analysis. But either way, it could also this could also happen to create a lower high to fulfill some of this imbalance. After fulfilling it, then price then continues to the upside. So this is how you can create a story on how you can formulate ideas on why price is doing this, that, and that. So let's just leave this marking. So currently we're still expecting a higher high on the weekly time frame. But again, if we look at the daily, what the heck is the daily time frame doing? So we can look at this as the higher high, higher low, higher high, higher low, higher high, because it breaks the previous higher high. So this could be a higher low, but again, a higher low could be called a higher low as as soon as price breaks the previous higher high or the current higher high. But price fails to do that, goes below the lower low, the higher low, the recent higher low, then it's possible that price either this is a liquidity grab to grab this equal lows over here, also to fill up some imbalances over at this side, or this could be a structural shift to the downside. Let me just draw this out. So we could either expect or possibly a market shift to the downside, because again, we broke this previous higher low over here, so we're expecting a lower low, lower high, lower low, lower high. And again, the possible reason, we can then zoom out and connect different time frame analysis or different time frame structure to add confluence on why is price doing that, why is price doing this, so we can expect more, or we can see the future or the possible future of where price might want to go. And again, we can look at this. Why is price failing? Why is the price forming a bearish trend on the daily, on a bullish trend on the weekly? Again, we could expect either way. This could happen. This could happen. Let me mark up. Either price wants to mitigate some of these OBs over here. Just mark it up. Green. Price could go down and mitigate this OB, then continue to the upside following the higher time frame, the weekly time frame analysis. Or this is a sign of a failed push to the upside, over here, and this could be a possible sign for price on the weekly time frame to shift order flow to continue to the downside. So let's say it breaks this previous higher low, so we're creating a lower low, a lower high over here, lower low, lower high, lower low. And the possible reason again why the weekly time frame is possibly shifting for a bearish trend is to come lower, to come mitigate this OBs and imbalances at the lower time frame, on the lower side of the price, to again on the 12-month. So possibly after mitigating that, we can then continue to the upside following the higher time frame structure. So I hope you learned something new. Again, backtest on different pairs. What works for you again won't work for me. And again, this applies to different time frames or other time frames. Again, remember we started on the 12-month time frame, then we went down to the daily time frame. It's the same thing on lower time frames. Let's say, just imagine we started on the 4-hour time frame, going down to the 5-minute or the 15-minute time frame, because again, the market, again, we believe in the fractal nature of the market, meaning what happens on higher time frames happens on lower time frames. So again, even though we didn't go to lower time frames, we started on the 12-month to the daily. It's the same thing. You start on the 4-hour down to maybe 15-minute, 5-minute. That's why, again, always backtest, because you won't learn from just watching a video. Its experience is always the best teacher. So again, thank you for watching. See you next time.